Ladies and gentlemen, thanks for tuning in. We're here in Carlsbad, California with Doug Casey at our recently concluded summit on navigating the politicized economy. So, Doug, did you come out with any new ideas, or does your guru sense tune in on any new trends as a result of the input you had?
One of the more interesting, actually, it was nothing that I didn't know and haven't thought about, to tell the truth, but putting these big arrows on a map with the people flowing and so forth, that it kind of reminded me of those maps that they had in high school classrooms when I was in high school, showing the waves of the Goths invading this way and the Huns invading this way into Europe, because these things have been going on for thousands of years, and they'll continue to go on. And the colors of the map on the wall are going to continue flowing.
Yeah, that was Thomas Barnett's presentation, which I also found very interesting. But I wonder about it. On the one hand, his arguments seem to stem a lot, or rely heavily a lot, on demographics, which I know you look at a lot. So I thought of similarities between your thoughts and his there. On the other hand, he's making all these rather specific projections, decades out, and I wonder how much credence can one really put in such things?
Well, yes, and there were two things that were quite interesting in his, but wrong in his presentation. He didn't take any consideration of economics. It was like when he talked about U.S. military power, of which he's a great fan, that would continue. And I wonder if 25 years ago, I don't know, he was thinking that Soviet military power would continue on but the U.S. is heading for a brick wall economically, and all these F-22s and B-2s and aircraft carrier groups and so forth, they're really just unaffordable. He never mentioned the fact that the U.S. is running even if you use cash accounting, forget about accrual accounting, which is much worse, is running $1.5 trillion deficit per year. And it's going up, not down. And there's no way it can go down at this point, because the Americans are not going to cut their military. In fact, Romney wants to spend more on military. And the Americans love their military. It seems to be the only part of the government which at least has the facade of being competent and honest. And of course, it's actually not that competent. It's about as competent as a heavily armed version of the post office. And is it honest? Well, maybe the average soldier is, but once you get up to the supply sergeant level, not very much. And once you get up to the Pentagon level, not at all. So, you know, he missed that part entirely. And the other part that he missed was he assumed that the nation state would continue to exist. He did point out, a point I always like to make, that all of these countries in Africa, and actually in Asia, certainly in the Middle East, are just arbitrary lines drawn on the map in the boardroom in Europe, and they're going to come apart. So that was.
I did notice that. I remembered our conversation on Africa when he was pointing out how linear those. How those lines on the map don't match the ethnic lines and so on.
Well, did he steal it from me, or is he going to accuse me of stealing it from him? I don't know, but it's just a fact. But I think what he missed there is that the nation state as an entity is actually on its way out, and it doesn't serve a useful purpose. So.
Okay, so stimulating lots of thoughts. Any other key highlights you want to zoom in on? You know, who really wowed you on the podium?
Well, there's nobody that I disagreed with on the podium that I can think of. Can you think of anybody that was really unsound other than
I wouldn't say unsound.
Barnett, who's obviously spent just a wee bit too much time circulating around the Washington Beltway talking to those types?
Carl Denninger has a different way of looking at things. I thought his take was very interesting. He focused on problems that we would agree with are problems, but his way of looking at them was quite different, much more mainstream than ours.
No, what are you thinking?
Well, like his his focus was on medical expenses and how that's bankrupting the country, and the housing situation not having been really cleared out yet. I would probably agree with both of those, but I would look more fundamentally about the government running the printing press, and why did the Fed cause the housing bubble, rather than the sort of more mainstream approach. Oh, these things happen.
Well, that's right, because I hate to make such a sweeping, seemingly overreaching statement, but almost all of the problems that we have in American society are caused by the government. And in the case of medical expenses, which he brought up, it seems pretty clear to me that absence government intervention, medical technology would be like computer technology, or for that matter, almost any kind of technology, and costs would be going down.
Moore's Law.
Constantly, yes, Moore's Law would apply to that instead of exploding upwards. And
he would agree with that. He says it's the law that's preventing that from happening.
He pointed out that there was something called Milson in 1983 that made it a law that anybody, anywhere that's put in an envelope, an ambulance has to be taken to the closest place, regardless of cost, and has to be treated, regardless of consequences. So it's kind of free medical care, which is reflected in cost. I remember there were times when I had to visit the emergency room during the 70s. Was like I had a skydiving accident once. It wasn't the kind of skydiving accident. It's usually more serious than an accident, but I hurt myself.
Well, you're here, so it can't have been the usual skydiving accident.
No, but I went to the emergency room just outside of D.C. I was the only person there. You do that today, you got an 8-hour wait, and you've got to cut your way through people that are using it, and that's because of that law. Most people are unaware of it. They think it's just the way things are.
So Doug Casey's telling us the government's the problem. Big surprise. That's nothing new, but it's good to hear that other people are seeing these things too. Now, how do we navigate this? The theme of the conference was navigating the politicized economy. No shock that it is politicized. What do we do about this? How do we survive? How do we invest?
Well, at the next conference we have, I'm going to put together a speech. Since I'm an amateur student of classical antiquity in general and the Roman Empire in particular, I'm going to do my speech on how much like Rome is the U.S., which is to say, is what we're going through now resemble what Rome went through when it declined and fell?
How close to Nero are we?
I think we're past Nero at this point. And it does amuse me that Americans are I don't think any Americans are really enthusiastic about this election. I mean, how can you enthusiastically support Obama or Romney? I mean, they're both empty suits. It's embarrassing. But it's pretty much like I always say about the Romans. I mean, they were so happy when Tiberius died, and they figured things couldn't get worse. But then they got Caligula. So, and it kept going downhill more or less from there. Well, a few upticks along the way, but that's where we're at today. So it's just a question of choose your poison, as far as I'm concerned, from this point forward.
But so again, having realized that we live in a politicized economy, it's not really a free market. How does one navigate? How does one stay?
Well, you've got to. The way I say it is, you've got to take advantage of the fact that it's a politicized economy. It's a very bad thing to have a politicized economy because it's destructive of capital. It generally reduces the standard of living. It's a horrible thing. But you always have to look at the bright side. And the government is going to create tremendous distortions and misallocations of capital by the very fact that it's so involved. And that does present opportunities. So it's not a time, really, to be an investor, because an investor is somebody who allocates capital to create more capital, to grow wealth. That's what investing is all about. It's very different from speculation. Speculation doesn't imply that at all. Speculation implies capitalizing on politically caused distortions in the marketplace. And one giant one that we have right now, a little bit tricky to capitalize on, is the current bond bubble. First, the Fed created a stock market bubble in the late 90s, which collapsed in 2000. Then they blew up a real estate bubble, which is still collapsing. And I think both the stock market and the bond market are still overpriced. Stock and the real estate market, I should say, are still overpriced, even though they've come down a lot. But the biggest bubble of all, and the most dangerous one, is the current bubble, the bond bubble. They've driven interest rates to basically zero levels, actually negative levels in some European countries, which is pretty unbelievable. I thought that I learned something new every day. I mean, I thought that negative interest rates were almost like cosmically impossible, but I've learned different in recent months. So this is creating huge distortions in the way people react and so forth. And of course, the biggest one of all is the bond market is going to collapse at some point. The time to have bought bonds was in the early 80s when they were yielding 12, even 15%. Now they're yielding 0%, and everybody's buying them. It's actually unbelievable.
But that's really a sign of fear, which really leads to the next bubble, the probable gold bubble, or certain gold bubble?
I'd say it's a certain gold bubble because looking at the bright side of the government doing all these stupid things, they will blow up other bubbles. They will create other bubbles. And it seems inevitable to me that gold and silver are going to be one of them because they're the only financial assets, and that's what they are, is financial assets, that are not simultaneously somebody else's liability, which is totally untrue of bonds. Bonds are a triple threat to your welfare. You've got the interest rate threat. Interest rates can only go up at this point since they're zero. You've got the credit risk threat. Will they be able to pay back the dollars or the marks or the euros or yen or whatever that they're in? Last, you've got the currency threat. Will the yen or dollars or euros or whatever be worth anything, even if they pay them back to you? I don't see, but everybody's buying bonds. Institutions are buying them. The average guy's buying them, trying to reach for 2% in yield when real inflation is probably running 5 or 6% per year. Who knows? The U.S. is becoming like Argentina, where they disguise these numbers and they don't admit the reality.
So these are examples of the basic principle, which I've described to people. It's, thinking of Ben Bernanke in his helicopter comment, government distortions. The idea is to figure out where the helicopter is going to go, where the wind is going to blow, and to stand there with a big net. This is what the speculator does. Where is the money going to go as a result of these government stupidities? And stand there with a big net.
That's right. And I've got to put my finger on the precious metals, and I've got to also put my finger on these resource stocks, gold and silver stocks. I'm not very interested in the base metals at this point because I don't see the economies doing very well, and that's not going to help base metals. I wouldn't touch an iron ore stock, for instance, at this point. But the gold and silver stocks are another thing, and they're actually quite cheap as we speak. It's very hard to find bargains in the investment world today. Everything's been inflated. But the gold and silver mining stocks are, I think, bouncing along the bottom.
Okay, well, words to the wise. Thank you very much, Doug.